My name is Jamin Goecker. I'm an associate real estate broker in the state of Alaska, and my mission is to help you to build an intentional and significant legacy for yourself and your family by coaching you in real estate. Today, we're going to be looking at one of the largest, both geographically and as far as the numbers, markets in all of Alaska. And we'll be looking at the residential, the condo, and the multifamily markets and kind of talking about what it is that we're seeing in this market, kind of in the summary, and what you can expect moving forward. Maybe some projections and theories as we move into 2024. Before we get started, though, as always, give this video a like. It does help so much with the algorithm, figuring out that this is a useful tool for people who are trying to figure out what's up and what's down in the Alaska real estate market. And let's go and jump into it. Now, the first thing we see when we are looking at the real estate market is we want to look at the residential market, and then we want to look at how much inventory is available. And this is pretty easy to remember. This time last year in November, the month where we have the most complete data, is there was 384 properties available in the MatSu Valley, and this year there are 384. So it is literally not changed even a little bit from the year before. Now, we go a little further back, we see that it's actually a bit of an increase from the past 2 years. It was about 313, 322. I'm looking at 2022, but that's about a half of what we saw usually around this time of year, because prior to 2020, we see that we had about 650, 700. So you see 384 is really about half of what we usually have on the market this time of year. Next thing we see is that the number of properties that are actually selling was about 140 this year, and now it's about 115. Not a big surprise there as interest rates go up and the inventory does become more compressed across the entire year. You do see the total number of properties that can actually sell starting to get more and more compressed. So not a big surprise there. Now, the average sold price for single family properties in the MatSu Valley went from about $382,000 to $398,000, which means that there's been about a 4.3% increase for the average sold price for single family properties here in the MatSu Valley. And that's not a big surprise. You see kind of a compression of the inventory, and the demand is still there, even with the higher interest rates. And so you do, in fact, see that the appreciation is going to be going up. Now, about 4.5% increase for the average sold price. That's still down for the rate at which it was increasing, because this time last year you were sitting at about a 9.9, the year before that like a 15.5. So you do see some incredibly aggressive appreciation the past couple of years here, and it's still increasing, but the rate at which it's increasing is starting to dial back a little bit, which not a bad thing. You really don't want to see these markets that are just so volatile and they're shooting up super quick, because if it goes up super fast, there's a chance it can come down super fast too. So I kind of prefer to kind of see these more gradual, predictable, sustainable increases for the appreciation as opposed to just shooting up 20% overnight. Now, looking at the condo market in the MatSu Valley, I will say first off that condos have never really been a huge part of the real estate market in the MatSu Valley. Kind of the nature of the place is you want to spread out, you want to have an acre of land and be able to do whatever you want, and that's kind of the nature of the MatSu Valley. I do suspect in the coming years the condos are probably going to become more prevalent in certain areas, and so we do cover them. But this time last year, there were 4 condos available on the market, and now there are 9. So you do see kind of an increase for condos over recent years here. But yeah, I'm not expecting it to suddenly jump up and start vying with the residential asset class in the market. Now, we do see that the number of condos that have actually sold and transferred ownership and all that good stuff went from 3 this time last year to 2 this year. So very small decrease just for the month of November, but we see throughout the entire year that more condos are in fact selling in the MatSu than the year before. Now, the average sold price for condos in the MatSu Valley went from about $268,000 to $228,000. So that's about a 14.7% drop in the average sold price for condos in the MatSu Valley. And, we talked about this a million times before. It's very difficult to extrapolate any data and any takeaways when the data set is just so small. If we had 100 condos, then that kind of creates average baseline that we can draw from. When it's only a handful like what we have, it's really difficult to extrapolate any statistical data, because it really comes down to what specific 1 or 2 properties actually sold that can really throw the entire thing off. If you have a big data set, it just mellows all that out, makes it a lot easier to discern that. But according to this, average sold price for condos in the MatSu is going down. I kind of suspect that if you had a condo this time last year, it's probably a little bit more valuable than what it was the year before. But I mean, it's kind of hard to tell when it's this small. You have to really just dive deep into the specific properties that we're looking at. Let's go ahead and take a break real quick here. For those of you who have been watching for a bit, you do know that I host a live stream, and usually those are going to be once every 2 weeks, and we'll have someone on to talk about, what they think about Alaska, somebody who lives here, what their pros and cons are, any tips they have for moving up here, and also talk with some industry professionals about what it's like living up here in Alaska, and what it is about their specific niche that they can contribute to your knowledge tool belt. And so do make sure that you tune in for that. And those are going to be once every 2 weeks. We've gotten off the habit a little bit here recently, but we are starting that up here, and looking forward to providing that for you. Now let's go and jump into the rest of today's market update, looking at the multifamily and then giving you a summary. Now, looking at the multifamily market, it is an interesting asset class to look at just from a trends perspective, because at the beginning of the year, we see that it was just way more multifamily properties available compared to the year before. And now it's starting to kind of sink back in the other direction, to be less properties available than the year before. And seasonally, that's just a weird trend to see, because around the beginning of the year, we were seeing, like the year before in January 2022, there were 11, then it was 32, and then 13 versus 30 for this year for the month of February. And really, we've just had kind of that gap has slowly been closing. And really, for the month of September, we see that it finally overtook the year before, and actually we have less multifamily properties available than we did the year before, because in September, it went from 43 to 39, and then for the month of October, it went from, again, 43 to 36. And this month, for the month of November, went from 46 to 30. So you can kind of see the disparity growing more and more. The number of properties available is going less and less. Historically, for the years before COVID, we see that 30 is about half of what we would usually see on the market for this time of years, and that means that inventory is still pretty compressed in the multifamily market. Yeah, I mean, even with the interest rates being higher, multifamily property investments are still a pretty solid bet in the MatSu Valley. So for that reason, I suspect we're still going to see a pretty good demand for them. Now, looking at the number of properties that have actually sold this time last year, there were 9 multifamily properties that sold, and this year there are 3. So interest rates are going to play a big part in this, so that's not a particularly big surprise. Now, the average sold price for multifamily properties in the MatSu Valley went from about $493,000 to about $578,000 this year, which means we've seen about a 17% increase for the average sold price for multifamilies. I don't really buy that it's gone up that aggressively. I've said this a million times before. When we're looking at multifamily properties, it really comes down to the specific type of multifamily that's sold during this time frame. And it also comes down to how many that there are. There are more multifamily properties selling in the MatSu Valley than what we find in Eagle River or Anchorage, but also it's still a fairly small sample size here, so the specific properties that are selling are going to have disproportionately larger effect than it should if we're looking at it from a statistical point of view. That being said, I do expect that there has been an increase for the average sold price, the value appreciation for multifamily properties in the MatSu Valley. Rents are going up, which do make the properties more valuable, regardless what's going on in the interest rates. So let's go ahead and give you the summary. Really what I'm seeing, if you are a seller, it's a solid market to be looking at selling in. It really just all the interest rates going up has not necessarily been a bad thing for you. It has made it so there are less buyers out there, but it's also created less competition for you. I'll explain. What that means is a lot of people were willing to sell before because interest rates were lower. They were willing to go buy something because then they could buy something at a good rate. Now just about everyone has got like a 3 or 4% interest rate or lower, and interest rates are obviously what they are, and people are just hanging on to them as hard as they possibly can and not wanting to let go. And with that being the case, a lot of people that would be your competition have kind of self-selected themselves out because they're not going to let go of their lower interest rate property and go buy something that costs more where they get less house. And so for that reason, you've got less competition now, which does create supply and demand issue again. Not nearly as bad as it was before, back in 2020. Where that was just absolutely insane. What I would say is, realistic expectations. Just know, hey, it's pretty solidly a seller's market, but we still have to get the house ready. We still have to put our best foot forward. We still have to make sure marketing looks good. We can't just throw spaghetti against the wall anymore and just hope something sticks. We have to actually put our best foot forward here to make it work, and we're not going to be expecting 5, 10 offers within the first day or so. This is going to be a process that we have to work. If you're a buyer, the takeaway that I would have for you is that, I guess really the advice, I would say, let's not try to wait until the market collapses or something happens and creates a perfect storm for you. Nobody knows what the perfect storm is until they can look in retrospect and look at it. A lot of people will, I guarantee you, will sit around just saying, we're going to wait till another 2020 happens and the interest rates are super low again, and then we'll jump. Well, those same people were sitting on the sidelines in 2020 saying, there's too much competition and we don't like this and we're just going to wait till the market collapses. And the market hasn't collapsed. And instead we see that the average sold price has gone up by about $100,000 in the meantime. It's ultimately supply and demand is going to trump any theories that we have out there as to what the housing market should do. And right now the supply is really low and not really seeing that that's going to change anytime in the near future. So if you are a buyer, if you are in a position where you can do this financially in a responsible way, I would recommend let's at least look at it, jump in, and get you something, because if you can find the right house now, there's a good chance you're going to be able to get much better terms than if the interest rates suddenly drop. Because if they suddenly drop right now, that's actually a terrible thing for you as a buyer, because you're thinking, oh, that's great. I can, afford this much more house and everything else. Well, so can everybody else, and everyone who's been on the fence suddenly jump in, and we have a situation like 2020 where we have actually less inventory than we did then, and proportionally probably a lot more competition. So it would be absolutely insane if that were to happen right now, and I don't want to get caught up in the fury of that kind of a market. So it's better to have something, and then if the interest rates drop, you just refinance and just sit back and watch everybody lose their mind in the housing market that ensues. If for investors, now's about the time of year where you should start collecting all your receipts and getting your bookkeeping together, because, taxes are going to be here before you know it. So let's make sure we keep all that nice and tidy, make sure your numbers actually balance out, and invest well. So this has been your market update. Thanks for watching. If you have any questions, feel free to reach out to me. I've got all my contact information down below. Feel free to contact me through my website, and we'll see you next time.